Joining me once again, Kim Anderson, Grain Marketing Specialist here at Oklahoma State University. Kim, let's start today by talking about U.S. stocks and the situation there.
Well, U.S. wheat stocks are relatively tight. You can go back to 2012-13 marketing year, 718 million bushels. Just finished up the 13-14 marketing year, 583 million bushels. Next year it's projected to be 574 million bushels. Look at hard red winter wheat, go back to 12-13, 343 million, down to 200 million this year. Next year probably 175 to 180 million bushels in these stocks. Both of those are well below the averages of, like for the U.S., which was 776 million bushels.
Now, those tight stocks would suggest that we're seeing higher prices.
You'd expect prices to be higher in, say, 13-14 than they were in 12-13 because we had less wheat. But if you look at the average annual prices for the 2012-13 marketing year, $7.77. It fell to about $6.87 for this year. And this next year, the price range is $6.35 to $7.65, which means that prices with lower stocks are expected to be about the same as they were last year. You look at Oklahoma prices, $7.45 a bushel, down to $6.98, probably around that average, maybe slightly lower for this year. You had lower stocks and lower prices.
Okay, now that would suggest that supply and demand isn't working. Is that just the case of we've got a market issue, or is there some manipulation going on?
Yeah, that's what you'd think, was that something fishy is going on around here. But if you'll look at the world situation with world stocks, while U.S. ending stocks have been going down, world ending stocks have been going up. You can go back to the 12-13 year, 6.44 billion bushels, up to 6.84 billion bushels this year, higher next year at 6.93. So what you've got is higher world stocks and supply and lower U.S. world stocks and supply.
So what does this situation then tell us about U.S. wheat's position in the world?
Well, we have less of a position in the world than we had, or less market power, if you want to put it that way. You look at U.S. wheat production, this year is projected to be 7.5% of world production. 20 years ago in 94-95 marketing year, it was 12% of world production. You look at our exports, 17% of world exports this year is projected. You go back 20 years in the 94-95 marketing year, 32%. So we're a lot smaller player, less than half of the percentage of exports as we had 20 years ago. So we don't have as much market power. We don't have as much impact on prices as we had 20 years ago.
All right, so then what can we expect from prices in the coming year?
Well, I think this last year that we just finished is a good indication. You go to mid-June of 2013, we had $7.15 prices. In early July, it was down to $6.85. By mid-October, it's up to $7.47. By mid-November, it's back down to $6.81. In late January, it's $5.95, below $6. But by late March, it's back up to $7.67. Early May, we had $8.05. Where are we now? Somewhere in the $6.80 range. A lot of price variability, and the reason for changes in those prices is mostly what was going on around the world. Now in January we had a good big pristine hard red winter wheat crop that deteriorated, and I think that run up to 8.05 was the market looking at a short hard red winter wheat crop coming on. We got that short crop, but during the same time world production expectations were increasing, and so world trumped U.S.
All right, so all that in mind, how does the producer plan for this coming year?
Well, I think they've got to remember that the average price is about $6.50. They've got to realize there's a lot of volatility and that the price is not going to be determined in the United States. It's going to be determined around the world and what world production is. With all that uncertainty, with all the unknown information, with only 7.7% of the world production, then I think you just stagger it into the market, either a third at harvest, a third September, October, and the final third November, December time period, or some strategy that moves out over time and you dollar cost average it and take an average price.
All right, Kim Anderson, Grain Marketing Specialist here at Oklahoma State University.